Hey, this is Todd. I've got a really big problem with this headline right here. It has nothing to do with Zillow or Scottman or anything else. It's simply the context here. More home buyers are turning to discount points to increase affordability. And it's almost half of all conventional buyers paid a point. That is a massive profit center for the banks. And half of these people, all of them are going to lose money. And let me explain to you why. So I'm not a fan of paying points. Let me pull up a scenario from today. These are today's interest rates. It's April 28th. They are for this specific buyer with this specific credit score with this specific purchase in the state of Colorado. But the concept still applies. It's essentially a game of blackjack. Let me walk through the details here. The loan amount at 5.875 is 300, at 6.25, 300, at 6.5, 300. The closing costs are exactly the same. Doesn't matter. It's going to cost this underwriter the same amount of time to underwrite a loan at 100 grand as it does 300 grand, at 5.875 as it does at 6.5. So there are fixed costs here across the board in this scenario. The only difference comes in the adjustments to buy down the interest rate. So when we look at this, at 5.875, there's going to be an adjustment or a charge of about 1%, $3,200. At 6.5, there's actually a lender credit that comes back of about $1,500. So when you look at this, the total difference in costs is $4,600. Now, what's the difference in monthly payment? When you look at the principal and interest, $1,775 versus $1,896, it's about $120. So here's the game that these people are playing. They're saying, I'm going all in. I'm going to lose $4,600 the very first day. But if I do so, I get to win $120 every single hand I play. Now, it's common sense to say, all right, how many hands do I have to play in this game of cards, right? How many months is it going to take me to win back that $4,600? And it ends up being just over 3 years. So why is that a great profit center for the banks? Well, here's why. Because economists expect that we're going to go into a recession within the next 12 months. And what happens when we go into a recession? Well, during recessions, interest rates drop. They have in the last 6 recessions by at least 1% or more. So what's going to happen is in the next 12 months, all of these loans are going to be able to refinance. And when they're going to be able to refinance, they're going to lose because they don't get any of that $4,800 back. So in these scenarios, you pay an extra $4,600 to take 5.875 versus 6.5. And a year from now, oh, well, now I can refinance into lower interest rates, and you end up losing $3,200. You weren't in the loan long enough to recoup those upfront costs. So it's a fantastic profit center for the banks. That's why banks are pushing you towards the lowest interest rates and getting you to focus on monthly payments, because by doing so, they get a guaranteed win, and we fully expect that we're going to see interest rates drop within the next 12 months. So before you pay points, regardless of who you're talking to, do the math on the break even here to determine how long you're planning on being in the loan. The odds are fairly high that you will not be in this mortgage based upon economic conditions. I'm not saying you're changing property addresses. I'm just saying that the interest rates are going to drop between now and the next 12 months. Now, what is that going to do to the housing prices? Well, when rates go down, prices go up. Housing stays strong through recessions because the cost of money gets cheaper. So that's not the problem. As a matter of fact, we can see that over again, time and time again. Recessions don't mean falling prices, mainly because the money gets cheaper. The problem is the greatest profit center for the banks is to get that guaranteed money up front by having you pay them the $5,000 today just to save the $120 a month. So before doing any of that, you got to ask yourself, are you looking for the lowest interest rate or the lowest overall cost based on your cash flow and equity objectives? Don't get conned into paying points and losing money. The banks have enough of it. Keep some of it for yourself.